In this video, we're going to be discussing the acceptance criteria. Now, the acceptance criteria is very important. This is the criteria that your strategies will be based on. And in EA Studio, we use the acceptance criteria across all of the sections, for example, the generator, reactor, the validator, and the optimizer. When you import or create a strategy, it needs to pass the acceptance criteria first before it goes into your collection. Now, whether you're on the generator, optimizer, or validator, you can click on acceptance criteria and it will take you to the common acceptance criteria. Now, what you'll see is that we have the complete backtest, in sample, and out of sample. So we have acceptance criteria for all three of them. Now, if you have selected in your generator settings to use the out of sample, then when you go to the acceptance criteria, what you'll see is you can have acceptance criteria for the entire backtest or the complete backtest, and that will include the in-sample and the out-of-sample. And you can select to have acceptance criteria for your in-sample part and your out-of-sample part separately. Now, you have a number of options available to you with the acceptance criteria, and we'll run through them very quickly. First, we have the maximum average position length, and this is the average length of a position presented in bars. Then we have maximum bars in trade, the percentage. This is the percentage of bars in a trade. Then we have maximum consecutive losses. This is where you would set a permissible limit for losing trades for your strategy. Then we have maximum count of trades, and we would advise you to use the maximum number of trades since this saves you the risk of your strategy being over-optimized. When you have a lower number of trades, you save some spread costs. However, you do not get reliable backtest using this. This is especially valid for the generator and the optimizer. For example, a strategy with a win-loss ratio of 1:0 is definitely a good one, but if the number of trades is just one, it's really not very trustworthy. Then we have maximum equity drawdown, and this term represents the biggest accumulative drop in your equity curve. Then we have max equity drawdown in percent, and here you set a particular value below which the equity of your account cannot drop. Then we have max stagnation percent. This is where you would put the time percentage which you allow the strategy to run without any profits. Then we have maximum stagnation days, and here you decide how many days your strategy can run without any profits. Then we have minimum average HPR percent. This is the value of the holding period return in percent. Then we have minimum average percentage length. This would be the average length of a position represented in bars. Then we have minimum backtest quality, and this is where you would set the quality that you want in case you have some ambiguity. Next, we have minimum balance stability. The balance stability is a measurement of the strategy's performance, and it blends to the R-squared correlation and scaling. Then we have minimum bars in trade, which is just the converse of the maximum bars in trade. Next, we have minimum counts of trades, and this is the minimum number of trades that you want your strategy to have performed over the set historical data in order to test its robustness. Next, we have minimum months of profit. What is the minimum number of months your strategy must have been on profit? Then we have minimum net profit, so the minimum net profit that the strategy has obtained over the term of the historical data. Then we have the minimum profit factor. This is where we would set the minimum profit factor, and it is calculated by dividing the total profits by the total losses. Minimum profit per day. What is the minimum profit per day you want your strategy to have achieved? Then we have minimum R squared. This is effectively the smoothness of your equity line. The higher the number, the smoother your line. So if you have minimum R squared of 100, it means that you have a perfectly diagonal line. And you would set what the minimum R squared would be in order to have an equity line looking the way you want it to look. Then we have minimum return or drawdown, and this is where you would select the profit drawdown ratio. Then we have minimum Sharpe ratio, and this is where you set the minimum value of the Sharpe ratio. Minimum system quality number. This is the strategy's system quality number. And finally, the minimum win-loss ratio. And this is another important option to add to check what your win-loss ratio on the strategy would be. This is actually calculated with a formula, and the formula is the number of profitable trades divided by the number of profitable trades plus the number of losing trades. The value of the win-loss ratio is between 0 and 1. A good practice would be to activate this feature together with the minimum number of trades and minimum profit per day settings. In all of these options, you can set the parameters that you want, you can change them, and you can add or remove the acceptance criteria as you desire.